Welcome to our weekly roundup of key business developments in Sri Lanka. I'm Nishani Pigera, and here are the main stories for this week. Sri Lanka grows for the first time in 6 quarters. Manufacturing sector records growth after 8 months. Electricity tariff cut likely in January. In our main story this week, the Sri Lankan economy grew 1.6% during the July to September quarter. This is the first such increase in 6 quarters. Agriculture, industries and services sectors expanded, with agriculture recording a 3% increase. Growth was driven by exchange rate stability, deflationary environment and easing interest rates, offsetting tax and utility tariff hikes. However, ICT, real estate and telecommunications sectors recorded negative growth during this period. Meanwhile, Dr. Nandalal Veerasinghe, governor of the central bank, said that the economy is expected to contract by 3% this year, revising his earlier estimate of a negative 1 to 2% growth. He added that Sri Lanka is likely to expand by over 3% next year and can expect a smaller current account deficit. This forecast is higher than the 1.8% forecast by the IMF. The Manufacturing Purchasing Managers Index in November expanded for the first time in 8 months. Highlighting seasonal demand and pickup in economic activity, increased new orders in the manufacture of food and beverages and textiles and apparel sectors. Service sector PMI trended higher, with the financial services, professional services and accommodation, services related to food and beverages subsectors driving the index higher. Such activity fueled credit to the private sector, which expanded for the 5th month. The 650 basis point cut in policy interest rates since June is moderating lending rates in the market, driving economic growth. According to Kanchana Wijesekara, Minister of Power and Energy, the upcoming revision of the electricity bill in January will potentially bring relief to the people. He further stated that hydroelectricity is currently being generated at maximum capacity. The minister also added that VAT will not impact the amendment and that the proposed new electricity bill has been gazetted. Cabinet approval was granted to reduce the Social Security contribution levy threshold to 60 million rupees from 120 million per year. The tariff was unchanged at 2.5%. This followed last week's Parliament approvals to bring the VAT threshold to 60 million rupees from the 80 million. Tea exports in November increased to 21.5 million kilograms, up about 2 million from a year earlier. All categories improved against the corresponding month of 2022. According to Neeraj Dimel, chairman of the Sri Lanka Tea Board, tea prices increased at the Colombo auction on the backdrop of Sri Lanka-Iran tea for oil barter. Demand was seen for low-grown tea sectors. Dimel added that further increases are expected at this week's auction and that tea suitable for Iran has seen a 50 to 100 rupee increase over the past few weeks. In our weekly tourism update, tourist arrivals for the first 17 days of December reached 100,750, pushing the yearly total close to 1.4 million. Average daily arrivals surged to 5,900. The primary source market in the month is India, followed by Russia and the United Kingdom. The SATDA is targeting 250,000 visitors for the month of December. Now let's look at the weekly movement of the All Share Price Index and the S&P SL 20 Index at the Colombo Stock Exchange. At the Treasury bill auction held on Wednesday, yields on 91 and 182-day maturities contracted. Bids amounting to 330 billion rupees were received, of which 172 billion were accepted. The Sri Lankan rupee was steady against the dollar this week, with the central bank's indicative mid-spot rate ranging around 326 to 327 rupees. The Colombo Stock Exchange announced that the Catalyst Board will facilitate the listing of state-owned enterprises. The government will hold more than 50% of the ownership, and the minimum stated capital required for listing will be 250 million rupees. Listing is expected to improve SOE's internal governance, operating efficiencies, and attract foreign and local investor participation. And that's a wrap for this week. We will see you again in the new year. Until then, we wish you a joyous Christmas and a prosperous 2024.